He got shorty texting him.
Yeah.
What's going on, guys? It's Jordan and Cole with the Brantford Exchange, and today we're just going to be going over our 3 golden rules that work for us, what we like to stick to when it comes to trading stocks. So, first thing is obviously sticking to your plan, and I think we both can, testify for that.
Yeah, definitely.
There's been so many times where we will analyze a stock and then have a plan set out, like with paper and pencil, and then we just, for whatever reason, either back out of it or
and it's
don't
emotional.
stick to your
because
plan.
You get emotional and you don't stick to your plan, and it's literally the worst feeling when you had a plan, and if you would have stuck to your plan, it would have worked out the way that you analyzed it and planned it out. But if you don't stick to that plan, and then say you sell too early, or you buy too late, something like that. When you make a plan, you want to be setting up your ideal entry. You want to be setting up your ideal exit, and you want to be setting up your ideal stop loss. Mm-hmm. So, and that goes into managing risk. So, say you don't, execute that stop loss where you plan to do it, or you don't exit where you plan to exit, then you might miss out on profit. Then you might, fail to cover profits, or you might end up bag holding if you don't have the discipline to sell when you're supposed to.
Yeah, and this is just speaking from experience. There's been so many times where Cole and I will look over a stock, have our preferred entry, exit, and stop loss, and we won't. Like he said, it's emotional. You see that you're up a certain amount, and it's never bad to take profits. Like, we want to say that, it's never bad to end it green.
If you're green, you're green.
There'll be, it'll go down, say 1%, not trigger our stop loss because we have it down at, say, 2%, and then we end up selling knowing that it's going to either bounce off a support that we set our stop loss at. We sell, it goes down, does exactly as we thought, and then we're sitting there like, well, we just missed out.
I wish I didn't sell, because it's a terrible feeling, but it all goes back. I can't tell you guys how many times, I would have made money when I ended up losing money if I just stuck to my plan. Yeah. So that's really important. That's number one. You need to stick to your plan. Have a plan. You need entry, exit, and stop loss. Those are your 3 things that you need.
Do not let your emotions just...
It's not an emotional game. It's not an emotional game.
It's business. Literally think of it as business. Be like, this is my business plan.
Think of that plan as if it's written in stone. You can't change that plan. When you make your plan, if you don't have a plan, then you don't have a trade. Okay? If you're making a trade, you need to have a plan first, and you need to stick to that plan. If you don't have a plan, then you're just going off the fly. And this is not really an on the fly type game. It's like we said, you make a plan, stick to that plan, and then you have your trade. Right. But number 2 is don't risk what you can't afford to lose. If you guys, because you're not going to be right 100% of the time. This isn't a game of being right 100% of the time. This isn't a game of being never wrong. This is a game of trying to be right more times than you're wrong. But it takes practice. So if you're risking something that you're not going to be able to lose, especially if you're a beginner, there's a good chance that it's not going to, end up well. I know there's so many, great investors throughout all of history have said, don't risk what you can't afford to lose. And it's so true. If you can't afford to lose it, then you can't afford to risk it. And there's always a little bit of risk involved in what we're doing.
Yeah, that's why we always say, and for those of you who are in the Discord chat, when I update you guys on my trades, you guys know if it doesn't have the full-on confirmation of a reversal and then have that uptrend that we like to see, I'll only go 20% of my full account in that position before it starts to confirm an uptrend, because that's all I'm willing to risk, because nobody can afford, or you shouldn't be able to afford, to risk 100% of your whole account value and then end up losing that, because then you're sitting there like, dude, are you kidding me?
Which is why, that's a really good idea, and I know Jordan definitely does that a lot, and I do it myself too. If you're getting in a little bit earlier, you're trying to get a better average by getting into a position a little bit earlier than it actually confirms a reversal, then do something like that where you only put 20% of your account in. That way, you're not risking what you can't afford to lose. And I'm not saying that you can afford, but if you're not going to lose the entire 100% of that 20%, it's like, you might lose a couple percent of 20% of your account. So that's a lot better than losing a couple percent of 100% of your account.
Exactly. So number 3 is always do your own due diligence. So always do your own research. Always analyze your own stocks. Sure, you can get opinions. You could talk to Cole and I. You could see what we're trading. But there's been multiple times where I'll trade something and then it ends up not being a good trade. Nobody, I don't care who you are, you're not going to be successful with 100% of your trades. It's not realistic. It's not possible. If anybody was doing that, 100% success rate, they would have to change something, because they could literally milk the market. It's just not. And it's not realistic.
World famous, and I definitely don't know that person. I know.
And Warren Buffett, he'll even he has speeches about it. He messes up all the time. But it's because if you're able to succeed more than you fail, then you're successful in the end, you know.
In this type of game, in this type of market, you're going to make better. You will end up at the end of the day making better money if you stick to your own plans, if you do your own research and have your own ideologies and beliefs about how the stock market works, and you make your trades based on that. Because if you're making your trades just based off what somebody else's plan is, or what somebody else's beliefs or ideologies are, then you're investing in something that you don't understand, because that's not your belief, it's not your trade plan. It's just going off of what somebody else seems to understand about the market. And it's not necessarily true that they're right or that they understand what they're talking about even. And just because somebody's technique works for them doesn't mean it's going to work for you. So that's why it's important to figure out a way to develop, your own trading skills, figure out what type of trader you are, and roll off what works for you and not what works for somebody else, because what works for somebody else is not necessarily going to work for you.
Yeah, everybody trades differently. Like Cole and I, we trade similar, but we might have different risk preferences. We might have. Yeah. I'll look at a stock, I'll call it out, and I think, hey, this has, I think that this stock is going to go up. I think it has upward potential. Mm-hmm. And he'll be like, no, I don't really think so. Because everybody sees things differently, Yeah,
and then even another example of that, just because he might call out a stock that says he thinks it has upward potential, and I might say, yeah, I think it has upwards potential, and Jordan might say, well, I'm willing to risk 5,000 on this, and I might say, no, you're crazy. I only think this stock is worth risking 1,000. So you can be different in all different types of ways, and it's really important to just be an individual in this type market.
And another great example with that is I encourage watch a Fox Business channel where they're talking about the stock market. They'll have a table of people literally arguing, being like, no, I think the stock market's going to go up. I think it's going to go down. I think Apple's going to go up. No, it's not. I think it's going to go down for this, that, and the other.
And nobody knows. It doesn't matter how great you are. It doesn't matter.
Wolf of Wall Street, I don't care if you're Jimmy Buffett, I don't care if
it doesn't matter. And nobody in this world, and least of all traders, least of all brokers, know if the stock market is going to go up, down, sideways, or in fucking circles. Quote. That is exactly how it goes. And it's absolutely true. Nobody knows. It doesn't matter how good you are. It doesn't matter, it doesn't matter if you're pulling 50% a year. You don't know if tomorrow the stock market is going to open up or down. You don't know.
Yeah. But that's why, like we said, you make a plan, you stick to it, stick to your guns, and then just try being as successful as possible.
Yep. And it does go back to that sticking to your plan. I mean, developing, you do want to develop that full plan. If you see a stock that you like, you want to develop that full plan. I want to get in here and I want to get out here. If it goes south, then I want to get out here. If it goes, set your stop loss. If the trade ends up going south, I want to get out. Say if you buy in at $15, if it drops down to $14.80, know beforehand, before you even get into the position, that if you buy in at $15 and it drops down to $14.80, that you want to sell out. You're done with the stock. You don't want to bag hold, and you don't want to take more losses on that thing. Well, and it's important to have that whole plan. So entry, exit, stop loss.
Well, we will have a whole another video on bag holding, because for those of you who do not know what bag holding is, it is the shittiest thing
it's the God's honest worst thing
on planet Earth. We'll make a whole nother video.
Because we'll make a whole nother video on it, because you can sit there and be, number one, losing money on the position you're in, and then number two, losing money on the positions that you're not in, because your money is stuck in a losing position.
And losing your mind, because you're like, are you kidding?
And losing your mind, and it's something that you don't want to do, and it all goes back to sticking to a plan, having discipline. If you have an entry, you have an exit point in mind, and you have a stop loss in mind, then you need to execute on those exact, if it ends up going north, then you need to execute and sell where your exit was, where you plan to exit. If it goes south and you start to lose money, then again you need to exit where you plan to exit before you even got into the position. But yeah, these aren't even techniques. This is like fundamental type stuff. Yeah. This is like ideologies, and these three things. I think everybody who trades stock, at least successfully, can agree that these three rules are detrimental to your success. Right. I mean, it's these things are really important. Having a plan, not risking what you can't afford to lose, and always doing your own due diligence. Don't be a follower in this market. Don't be a follower ever in life. I mean, in general, you don't ever want to be a follower. That's just lame. But in this market, if you're going to be a follower, you're going to be a loser. And in this market, if you're a loser, you're losing money. So.
Yeah, but follow us on Instagram, Twitter, and
we'll make sure to follow us on everything. But
If you guys have any questions, leave them in the comments below. You know, always reach out to Cole and I. We'll be glad to help you. The link to the Discord chat, which you see right up here on the screen where we talk every day with our traders, will be in the description below. Yeah. Follow us on our Instagram, Twitter.
Make sure you subscribe to the YouTube too. We need more subs on the YouTube. Yeah, if you're in the Discord or you're following us on Instagram and you're not subscribed to the YouTube, make sure you subscribe to the YouTube because that's where all these videos are coming up on. You want to stay updated with that. So, yeah, but I think that's it. Until what's the next video? It is 3. So after 3 golden rules, this was 3 rules, 3 golden rules to follow. We're gonna go over 3 biggest mistakes that new traders make, so that you guys can hopefully avoid those mistakes. Just based on our experience, what we've had to go through the hard way. It's not fun. So,
but yeah, that's gonna do it for today, guys. Enjoy the rest of your day. Thank you.
All right, everyone.